There's free money in the stock market. No one's taking advantage of it. So we're going to show you how to do that tonight. It's not a scam. There's no catch. There are no strings attached. I showed this to people, and they're completely amazed by it. So I'm going to show it to you guys. And I'm not trying to sell anything. This is what I've been doing for 2+ years. So yeah, I'm going to get into it. This is the WalterFootball.com After Dark Show for July 20, 2025. I'm going to be talking about that as well as some other stuff. So please hit like, subscribe, comment below, share this video, visit the link in the description for the merch store. I'm wearing the appropriate shirt for tonight, the AMC 801 shirt. This is financial advice. Now, some of this stuff is not going to be financial advice tonight. This is financial advice. Don't invest in AMC. It is a terrible company run by an idiot CEO. I just like this shirt because of the good old times in 2021. But as Tom could attest. But before we get into everything, I'm going to talk about how you can help us here with the merch store. Everything's 20% off right now. So as you can see, you can find my shirt here, a bunch of other shirts I've worn. You can get any color. You can get in long sleeve t-shirt, and you get in hoodie, you get a women's tank top, you can get an infant onesie. So if you want to get like a money laundering infant onesie and piss some people off, you could do that. So it's 20% off. We have our apron, of course, our mugs. You can go to Amazon, buy my books. The most recent one is Jerks of the College Years, where I made fun of people I met at college. I was at Penn State for 6 years. It was a lot of fun, and I met a lot of weird people. So you can read all about that. It was a lot of fun to write. Also, consider super chats, super stickers. It's the best way to support the show. It really means a lot. Slew, John Sanders, Armac, you guys were awesome last week. Just with your contributions, it's like 8x every time you guys would super chat us, because YouTube ads pay nothing, and so that really keeps us going. I can't say it enough. So we're joined tonight by Quacky T of Twitch. You can follow him here, Quacky_T on Twitch. But Tom, Quacky, how's it going?
Walter, here we are again. Hello to you, and hello to everyone out there in the Walter football family. I'm appearing live from the den tonight. The den. Or the study, depending on your preference. But hey, let me ask you something. You ever brush your teeth and then immediately after drink water?
Well, you're not supposed to do that. You're supposed to let the film stay on your teeth. It's like you're not even supposed to rinse it out. That's what my dentist told me. I didn't even know that. And she's like, how do you brush your teeth exactly? Because I like set the world record for cavities. And,
yeah.
I'm gonna share this video with my dentist, actually, because he asked me to do so, and he's probably gonna have a good laugh. But my old dentist, who retired, probably thanks to all the money I spent there, she said that you're not supposed to brush your teeth and leave it on for like 20 minutes or so. And so I've tried not to. If I'm thirsty, I will, obviously, but like no, I don't. Like, why do you do it, or are you asking me?
Well, I did it tonight for the first time in a while. It's really cold. That's my point. When you drink water, like right after you brush your teeth, it's extra cold. I wonder why. I mean, there's got to be some science behind that, right? Do you know about that?
I mean, is the water cold, or like?
Well, yeah, the water's cold, but it's colder. It feels colder than usual. Someone in the chat's got to know what I'm talking. Let's just try it sometime. Next time you brush your teeth, just with apologies to Walt's dentist, just one time, just have a drink of water, like 30 seconds after. And you'll see, like it's extra cold. It's colder than cold.
I feel like I've done it before. I've never noticed this. I don't know.
Maybe there's something wrong. Maybe your old dentist was paying $20 for a hamburger.
Yeah, it could be. Yeah.
Someone else in the chat has got to. I mean, I'm not the only one, right? I'm not. I was going to say maybe there's something wrong with my teeth, but I boast a perfect dental record. I've never had a cavity. I never had braces. I never had my wisdom teeth out. But I am nervous to go again now. So, but like I thought the cold water after the teeth brushing, I thought that was universal. I didn't think that was exclusive to me. You think maybe there's something wrong?
Wait, does it make your teeth feel cold, or is the water cold? I'm confused. Do your teeth feel cold, or is it the water that's cold?
My whole mouth feels colder.
The whole mouth feels cold. Okay.
Yeah.
Okay. I can kind of get that. I kind of get that. I get that sensation like after I drink soda or something, and I try to like rinse my mouth out just because soda is so bad for your teeth. That it does feel colder. I don't know about like toothpaste. I never like.
Yeah.
Tried it, but I maybe there's something to that though. I thought you just meant the water tastes colder for some reason.
No,
that's what I thought you meant. I was like, that's pretty
cold
weird.
in your mouth. Oh man, you ever brush your teeth and like drink a glass of orange juice? It tastes terrible.
That's I've not done that at all.
Try it. No, I mean it's good.
It's good. Okay.
Yeah, that would be a good. Actually, I feel like they might have done that on Parks and Recreation. Maybe that's where I'm thinking of. Like, just tell like, oh, like have you ever done that? Like, drink orange juice after brushing. It's horrible.
Um,
A couple sips are horrible.
But I like I told you, I stopped watching Parks and Recreation after season 3.
Yeah,
I just was never impressed by it. It was like I called it like a charmless version of The Office, where every character just seemed like a watered down version of someone from The Office. So I don't know. It was okay. I didn't hate it. I just didn't like it. It like just had no urge to continue to watch it.
well, I'm very, as you know, it's one of my favorite shows. I'm very surprised to hear the timeline of which you quit at the end of season 3. I think season 3 is arguably the best season, and like honestly, I don't
It
think
was better. It was better than seasons 1 and 2. Yeah, but it still wasn't that good.
4 is good, and I said this before. Once Leslie wins the election at the sorry for spoilers. Once Leslie wins the election at the end of season 4, it really goes downhill from there.
Well, now you spoil it for me. I'm now definitely not watching. I was really gonna tune in. I'm just kidding. You spoil it for me. I don't know.
Yeah,
I feel like once you reach a certain threshold, you can't spoil something. It's like, hey, the kid saw the guy, what's his name, Bruce Willis's dad in Sixth Sense. Spoiler alert, you know. It's sorry for those of you who are like been dying to watch it for like 30 years, but there's definitely a statute of limitations on spoilers. I hate spoilers. Actually, I've said this before. This guy, I respect like his work on Twitter, football wise. He's a football handicapper. I muted him because he was spoiling Game of Thrones. Like I have 2 kids.
I remember
putting them to bed. Yeah, putting them to bed. Like my wife and I we were half an hour behind, and so I was waiting for her to go to the bathroom or whatever. And like I went on my phone and searched Twitter, and this guy like during the show he's like spoiling things live. I'm like, come on, man. So I muted him, and like 3 years later I forgot I still had him on mute. I was like I haven't seen this guy tweet in a while. I was like, oh wow, I've had him on mute for 3 years.
Wow. Yeah, see, I wouldn't spoil it like that, but I mean, I don't know if that's a huge spoiler. Like once she's running, like I don't know, like how do you think it's going to work out? I don't know. It seemed to me pretty clear that she was going to, but anyhow. But we were talking about the cold water and drinking orange juice after you brush your teeth. Let me ask you if you've ever done this. I mean, I feel like everyone's had to. Do you ever like grab a sip of a drink and you expect it to be one thing and it's another?
That happened to me when I was a kid.
And
I had some like an ecto cooler. We talked about that before, and it was great. And then like I reached for it and I drank it, and it was disgusting. I was like, "What is this?" And it was someone's like fruit punch or something. It wasn't like it was like raspberry fruit punch. It was some weird sort of like a version of fruit punch. And like I just drank one of my friend's drinks by accident, and I just like put it back. I was like, "Don't notice this." I'm like grossed out. I hate drinking out of other people's things. That's like something. It's like one of my pet peeves. I can't do it. Like even in my kids, I can't share, like my wife even, like I can't share drinks with anyone or really food. It just like sickens me. I'd rather just not eat and like be hungry or thirsty. I can't do it. I just can't do it.
This is interesting. So let me ask you this: would you let your if you had like chips and salsa, like would you let your wife double dip?
No, I wouldn't eat it
anymore. Walter, are you serious?
No, I'm done. I'm out. I don't like. I can't stand anyone who double dips. Like, well, I think that's like grounds for divorce. First of all, like double dipping your chip.
I can't believe what I'm hearing.
This disgusting double dipping your chip. I never do it. I do it like if you have like a mozzarella stick, what I do is I'll break it in half. And so I'll dip it one end and then eat the other end. So like I'm not double dipping it. Like I feel like it's disgusting. The same thing, like I think a worse version of that. I had this friend who did this, and I've like never I haven't hung out with him since because he did this. He like we were watching TV. I think we were watching Lost or something. We had a bag of cheese curls, and he was eating cheese curls out of the bag. It's one of those big bags. And like he ate a few cheese curls and he licked his fingers and then he put it back in.
Oh, that's bad, man.
That's horrible. I was so sickened by it. I was like, I've never hung out with this guy.
Yeah.
Seriously.
No, that's too much for me too.
Yeah.
But I'm surprised to hear you say that. Like you wouldn't let your wife even double dip. I mean,
well, look, I mean, it's my wife. What am I going to do? Like yell at her for that? I don't know. I'd be grossed out by it, but it's disgusting. I think like if my kids did it, I wouldn't eat it. If it was my wife, like I don't know. I still wouldn't not want to do it. So no, I hate people with double dips. My wife is not a double dipper anyway. Like she doesn't do that stuff. Like I feel like you have to be like sort of a psychopath to double dip stuff.
Well, I wouldn't do it either unless it was like with the girl I'm dating. Like, you know what I mean? Like I wouldn't care about that.
I feel like you should date someone else if they're double dipping though. Like it's like a
I
bad
can't believe what I'm
relationship.
hearing. I think
Yeah.
you're one in a million. You're one in a million. Yeah,
They
no,
did a whole episode of Seinfeld on it. Like George got yelled at because he double dipped his chip.
I think that's a rarity. Like, I mean, with like with the general public, sure. Like at a party, of course. Like I definitely agree.
Yeah,
But like, not with my significant other.
yeah.
Oh no! Wow.
I'm not a fan at all.
Yeah, the people are loving the banter. I can see. I appreciate Mike, Patrick, Slew, everyone. Thanks for joining.
Before we get into the cover calls, Cashier posts. Let's read these comments. Shirley Quacky's never indulged in Indian sprinkle cookies or gypsy lemonade.
I don't order lemonades, man, as I mentioned last week.
Why I told the story before. These girls across the street, they're selling lemonade. Yeah, look, little girls, whatever.
Yeah.
And it was so hot and humid. I was like, oh, please give me lemonade. They're like, it's $1. I'm like, okay. So I gave them $1. They gave me this tiny Dixie cup of lemonade. It's like a shot of lemonade. It's like I paid $1 for this. I knew like inflation was bad, but like come on, man.
Wait, when was this?
Well, that's the point of the story. So these two girls live right across the street from my house. They're the two that were selling lemonade were like 12 and 10 maybe. Yeah. And so the other day I'm walking my dog. I see this like hot girl walking out of the house. And I'm like, who is that? Because I know like the two parents are like in their 50s and they have two young girls. And I'm like, is that like the husband's mistress or something, or like a hot cousin lives like visiting? And then and it really dawned on me. We've had this conversation before about how fast time travels. Like that lemonade store is in 2015. So like the 12-year-old girl is now 22. And so like I just never dawned on me that like people just grew up so fast. And I'm like, wait, who is this person? I'm like, wow, it's like an adult now, you know? So yeah, so that was kind of like crazy to me. Another thing, like there's another guy named Walt on my street, and when I first moved into my house in 2010, I saw like I was walking to my mailbox and I saw him like he's holding his little baby. And like that was 2010. She's like 15 now. She's about to drive her car. Yeah, it's insane. So things go by very quickly. It's insane. Wow. Patrick says Saturday night drinking game, doing shots every time. Independence Day, Last Dance documentary, Pizza Hut, or a sports game a decade old is mentioned. Happy Saturday, fellas. Well, he is not taking a shot yet. We'll see.
We're doing okay. Yeah,
$7.50 hot dogs. I think I talked about that with Tom last week.
Dude. By the way, I was thinking about the story you told where you only ordered the soda, and they're like, "Yeah, Walt cheaped out on us." What a freaking dick!
Yeah.
Sorry for the vulgarity there, but
yeah,
I can't believe the audacity of some people.
Yeah, I mean, for those of you who didn't hear, like I was at a restaurant. This is a long time ago with my girlfriend, and I was sick with mono, but I still went out because it was like her friend's birthday, or whatever. And like everyone ordered food, but I couldn't even eat. I just ordered a soda, and there were like 8 people there or something. And so they're like, "We're gonna split the bill 8 ways." I'm like, "Wait a second, I didn't eat any food." So I put in a few bucks for my soda, and then this guy's like, "Wow, Walt cheaped out on us, huh?" I'm like, well, "I didn't order food. Like, you should split it 7 ways, not 8." I paid for my girlfriend too. Like,
yeah, you know? that guy should be assessed a fine for that, like $100 fine.
Yes, I agree.
That's not right. That's a violation.
Yes. He's in Florida. The water can't be cold out of the tap.
Really ice everywhere.
Patrick says my portfolio is balanced, aggressive barbell, 35% moonshots, 45% high growth, 20% stable growth. My dad recommended BBAI. It's an AI company a few months ago, and it's almost 100%. Yeah, I've seen that crawl up recently, so that's pretty cool. Congrats on that gain. Yeah, I think you should definitely balance out your portfolios, with some sort of stuff. And I'm going to show you guys just how to get free money in the market. Like it's pretty insane. And I even showed this to Evan. Evan is our picks guy on Tuesday during the season. He's very financially savvy. He's in real estate and whatnot. He didn't know about these cover calls and mostly the cash secured puts, which he preferred. And I actually think cash secured puts are better. And like I was showing him this one night, and he's like, wow, I can't believe like how like this can't be real. Like you just get free money, and like yeah, and like he's like I'm gonna start doing this. Why haven't I been doing this? So I'm gonna show this to you guys once we get to everything. Teeth brushing, double dipping, pray tell was next. All right, we're gonna get to the meat of it, and then we're gonna get to some other stuff at the end. I really want to focus on this though, because it's super important that like everyone knows, and I always harp on like I was harping on like schools for not teaching stuff to kids. Like, you know, you learn what a mitochondria is. You learn how to do quadratic equations, and like, can any of you listening like know like what that is now? Like mitochondria, powerhouse of the cell. Okay, but like what does it really do? And like quadratic equations, like if I gave you one, could you solve it? Like the answer is probably no. Like you just don't, this will never apply to you in real life unless like you go into like certain specific fields. But like this stuff is important. You know, it's really vital to like be able to sustain yourself and make money in the stock market, because you know, if you invest in like 401k and whatnot, like it's not going to grow that much. And like once retirement comes, like you're going to get screwed. And I always say that like people should definitely run their own retirement funds, just so you can get the most out of it. Because if someone else is doing it, like that's not, they're not like you're not in their best interest. Like they're going to look out for themselves. Yeah, your portfolio is going to increase, but it's not going to be as much as you'd want. So I always like urge people to like learn this stuff, and I'm gonna like teach people. So I mean, Tom, have you had a lot of experience doing options? If so, like how much?
Not really. Honestly, just when everything was going crazy in 2021, I would buy some calls or puts, but I really don't know much about them. Like other than like it's I always kind of looked at it as like an over under, you know.
Okay,
So
yeah,
so essentially, I know next to nothing.
okay.
I guess to really be straight with you.
Okay, well, we'll teach you guys. So let's go with our old favorite GameStop here. I'd this stock, by the way. I've been buying puts on, and I'll explain why as later. But so the this is not what gives you free money. I'm just like I have to explain what options are real quick, and then I'll get into how you can make money doing this like really easy. Like, you can make money buying options as well, but it's risky. Like what I'm going to teach you is like very risk free, as long as you wanted to buy the stock that you're looking at. So if like this, all this stuff on the right may look confusing. I don't want to see, is it being covered up? Let me look. That's okay, I guess. You know, I'm gonna hide the comments so people can see. Okay, so like this chart, if you're looking at it for the first time, this might look over like a little overwhelming. You may be like, oh, there's too many numbers. I have no idea what this is. It is like once you learn it, it's pretty simple. So just an options contract is basically, you know, you're basically agreeing to buy a certain number of shares at a certain stock price, and that's not really what people buy options for. They just do it to make money. So, for example, you look at GameStop, and this middle thing is called the strike. This is the price at which you're hoping it gets to. So let's just say like. And this right here is each date. It's every Friday. Some stocks have like monthly options. A lot of the big ones have weekly options. So GameStop will have weekly options. So there's July 21st, August 1st. You can keep go onward. I think it goes to like December 17th, 2027. So like you can choose what date you want. So in this example, if you're like, okay, I think GameStop's going to have a great week. It's going to go way above 24. You can click this. Sorry, I'll do this one. So you can buy a one options contract for, it says 26 cents, but each options contract has 100 shares. So whenever you're looking at something like this here, you're going to multiply by 100. So 0.26 times 100 is $26. So you can buy an options contract for GameStop at the $24 strike price, dated for next Friday, for $26, which is the ask. If you want to sell it, it's for $24. You're never going to sell something as much as you can buy for. It's just that's like the fact of life, you know. So if you're very bullish on the stock in like the short term, this is a good thing to do. Actually, I would go out further, like week wise. Like I would go to like August 15 or August 22, just to give yourself some like wiggle room. In fact, I have some options for October 17. I like going 1 to 3 months out. just because if you go shorter, you put yourself at higher risk. But if you give yourself more time, you're going to be at less risk. But let's just say for now, you're going July 25th, so next Friday, and you're like, I'm going to buy this for $26. So what this basically says is you're going to agree to buy 100 shares of GameStop at $24 if this goes above $24 at the end of trading on Friday, July 25th. So you're like, why would I do that? GameStop's $23.30 right now, and you're paying $26 to do it on top of that. Well, if GameStop skyrockets, this contract is not going to be worth just $26. Like, look at these amounts. So let's just say it goes to 26. This contract would probably be worth this amount, $144. So you're going to be turning each contract, which is worth $26, into $144, which sounds great. All right. But there's a downside here. And if the underlying stock, GameStop in this instance, doesn't go to 24, this is going to go to zero. In fact, even if it stays at 24, you're going to lose money because you're paying $26. So you basically lose the premium there. Like, it has to go above 24, 26 for you to break even. So that's basically it. If this goes to zero, you will lose your investment. Let's just say like each contract is $26. You're like, okay, I'm going to buy 10 contracts. So basically 1,000 shares, but you're never going to exercise it. You buy 10 contracts at $26 each. That's $260. And if this doesn't go past 24 by next Friday, those contracts are going to be worthless. They're going to go to zero. So that's why this is very risky. And that's why I was saying you should buy further out. Now, the downside of further out is it's going to be more expensive. Like, you go to October 17, these contracts are worth $281. So you get one contract for $281, but there's far less risk here because you have 3 months for this to go up, and there's certainly a chance it does. And again, with the $22 example, this could turn into $375 within that amount of time. Or like if it goes like straight up real fast, like, you can make a lot more money there. So that's basically the basics of buying calls. I want to stop there for a second. Is any questions so far? Todd, you're on mute.
Not for me. I'm familiar with this much at least. Okay. So
okay, yeah, needs to scrap, teach kids cover calls and how to punt. Exactly. And betting WNBA, yeah. I have something for WNBA. It is incredible. I'll get to that later. All right, so puts is the opposite. If you think a stock's going to go down, you buy put contracts. So this is like sort of like shorting a stock. So if you think GameStop's going to plummet, you buy these contracts, say like at $23. Sorry, this is $34. So you could buy a contract at $34. And so if GameStop goes well below $23, this contract is going to be worth a lot more than $34. So you sell it by the time, or right before July 25th. If you don't have a certain sort of account, like they'll do it for you. Otherwise, like this will turn into a short, and you need a margin account for a short. So usually, like, you don't have to do anything, but I like to sell. If I'm buying calls, I like to sell them myself. So that's basically it. And again, same thing. If you go further out, it's gonna be more expensive. Like here, instead of $34, it's $275. It's more money, but it's a lot safer. There's like far less risk, and like that. I think that's a trap that a lot of people fall into. Like, if you ever hear someone talk about like buying options, like I had this conversation with a friend of mine a couple weeks ago. I haven't seen him in a while, and like, hey, what are you doing? Like, we're talking about the stock market eventually. He's like, yeah, I took a beating buying options. And I'm like, oh, like, what were you doing? He's like, yeah, I was buying weekly options. And I was like, that's such a big mistake, because you're giving yourself no wiggle room, and the contract's going to go to zero. And like, yeah, you might make more money, if, like, risk reward, like the higher the risk, the higher reward. But like, you're just putting yourself in such a bad situation, and like, you're really going to cost yourself. And like, yeah, he did that. But if you go further out, 1, 2, 3 months, and even like you can even go further out than that, you're going to give yourself a great opportunity to make more money. So that is something I would recommend. I'm not anti-buying options. In fact, that's primarily what I do, except for the selling, which we'll get to in a second. But I think like I'd never like unless like I think the stock's going to skyrocket like right away. Like I will never buy weekly options. I think I will go a month out. Like most of my stuff's like August 15. This is actually my this is my son's account. Let me I only have a couple of options out right now. So let's see. For example, I've Levi's put for August 15. I have GameStop. Here's the thing I was talking about. GameStop October 17. So 3 months out. The CRWV. So July 25th. So this is a week out. This I had for a while. So that's a week out. So and then VG is August 15. So most of my stuff is like August 15 or later. So that's what I recommend. I feel like a lot of people who just get into options will just buy weeklies and they'll get burned, and then they'll be like, oh man, I just lost a lot of money like doing options. I'm never going to do it again. Or they'll keep doing it and they'll keep losing money over and over again. And yeah, they'll have some wins here and there, but for the most part, they're going to lose those. Is that, Tom? Is that what you did? Like when you were buying options, did you do weeklies or did you go further out, or do you not remember?
No, I went a little further out. I mean, every now and then, like I rolled the dice on like a weekly, but like back when like AMC and GameStop were going crazy, I was like, okay, like maybe it'll go nuts like this week, and I bought like a couple. It was never anything crazy, like a couple contracts for like the short ones. Okay. But I would buy more than that for the longer term. But I would always go around a month or more, depending. So.
Okay. BBIG. Where's that? I have that somewhere.
Oh, I remember BBIG. I saw HQGE in there too. You still holding that?
It's worthless. There's no point in selling it. Yeah, well, let's look at that. Hold on, this is not it. GameStop. I think I had that in some other account. Yeah, BBIG. There you go. There it is. 2520. So that patch say, did I see? Yeah, did I see? Yeah, it was. That was definitely a huge loss. There was the CEO went to prison, so that didn't work out so well. I have like one fiat. That's anti Bitcoin. It pays a monthly dividend, which is actually just made money. It's down 68%, but I'm actually up on the stock because it pays monthly dividends. HQGE, yeah, like it's worthless. Like there's no point in selling it. This is one of the first stocks I ever bought is IBM. I have like fractional shares I can't get rid of. Excella was another bad one. Only have 8 shares, but still. But that's because of reverse split and whatnot. So anyway, so what I'm going to do here, Stan the Trading Man, yeah, is promoting LTNC. I had LTNC. I sold it for a loss. Yeah, they almost had Tom Brady. It was like Tom Brady was drinking that water, LTNC, and like that was a major sticking point for me. But there's a lot of fraud in that company too. Basically, there's a lot of fraud going on in the stock market, if you hadn't noticed. Which back in the day, I was like anti-short selling. I'm like how could this be legal? Like how can you like borrow shares and sell it? Like just doesn't feel right. But like some of these CEOs are so scummy that like you kind of need short selling to kind of like police the market and make sure these people don't get away with it, but they still do. Like it's just awful. I can't believe like people are such scumbags like this. But yeah, that was a lot of fraud. AMC, like the CEOs, like I think he's done some shady stuff too. So, like GameStop is like one of the few stocks you can trust because the CEO Ryan Cohen doesn't take a single dollar in income from the company. He treats it like his baby. He was already a billionaire. Like he didn't need this. Like he just wanted to invest it because he loves video games and like he wants to turn it into like a monster. So. If someone asked me what I think GameStop's value should be, like if you actually like if you asked Grok or any other AI, I just asked Grok. I'm not sure what the other AIs would say, but I'm like, hey, if you have a company that has 10 billion in asset, 9 billion in cash, half a billion in Bitcoin, almost no debt, and a large following, and a CEO who doesn't take a single dime in income. I'm like, what should that stock be worth? And I mentioned the float too, and the Grok was like, well, this should be worth $50, but if there's a lot of enthusiasm, it could go up to $125. So it just shows you how cheap GameStop is right now. Like it's trading at like asset value. Like this, like if they could just like could just buy back the whole company at the stock price. And like, yeah, that'd be foolish because like they spend all their assets, but like they could take it private right now, and without a sweat. So GameStop's cheap. That's why I have calls on it. Like it has to go up. Like there's like it's illogical for it to go down. And you know, I suspect it will go up, but I think like once it does go up a lot, like we're gonna see the same thing. Some like not, it was not really dilution, but like, you know, just raising money. Like they've raised so much money. It's insane. So yeah, I think that GameStop's a great company to invest in, and also do covered calls and cash your puts in, which is what we're going to get into right now. Patches, my Fidelity portfolio is now Nvidia, Walmart, MA, Tesla, Bitcoin, Amazon, BBAI, GameStop. Just restarted my individual account earlier this year and up 15%, almost 40% of my Roth. Nice, that's awesome. AMC for the win. Adam Aaron. Adam Aaron is like the worst CEO. Like, he hasn't bought any shares. Like he's taken GameStop. GameStop was $62 in July, or was it June of 2021 or July 2021, and now it's $3, but not really, because it's really 30 cents because they did a 10-for-1 reverse split. So yeah, he's taken a stock from $62 to 30 cents in 4 years. And if you look at this is funny or fast. If you look at like this is a good site I like to use for the fundamentals, Google.finance. Which is important to find a stock, like info on stocks you want to invest in. If you look at AMC, they here, this is funny. So if you look at like the yellow bar is the most important one. It's net income. They have been negative each quarter. If you look at annual, they have been negative each year. 2020 obviously was COVID, but still negative each year. And if you look at the balance sheet, you go to the balance sheet. You look at cash, 632 million in cash. They have 10 billion in debt. So not very good here. They're gonna have to dilute more to make more cash just to pay off the debt. Like when GameStop dilutes, like they do it to raise money to make more investments. Like they want to buy Bitcoin. It's just like Bitcoin's an amazing investment. Like they want to buy other stuff. Like Ryan Cohen has been authorized to invest on the shareholders' behalf. When AMC dilutes, they do it just to pay off their debt, which is like a debt spiral. They're going to go bankrupt at some point. It's just like a matter of time. I don't even know what they could do to turn things around. I think like I would have some ideas, but it's not the show for it. Like I think you could do a bunch of stuff to kind of like stem the bleeding, but like there just might be too much. Like what Adam Aaron really needs to do is like close down like areas that aren't doing very well. That's something that Ryan Cohen did. He like closed down a lot of stores that were underperforming. That helped a lot. Like certainly there are a lot of theaters that are underperforming, but it doesn't seem like that Adam Aaron like even cares to do that. I think he just like, I feel like if he does that, it would make him look bad, and I think that's something he doesn't want to do. And I feel like he just worries about his image too much, and that's one of the many things he's done that's very poorly. Oh, he meant 2 exclamation points, but typo Adam Aaron. Yeah, he sucks. Guy sells more shares. Yeah, the movie's. Yeah, he doesn't buy any shares. You think that like a CEO, okay, maybe you don't buy your shares at $65, but if your shares are going for 30 cents, don't you think you would like invest if you're the CEO? Like, I feel like you should be obligated to invest if you're the CEO. That's my thing. I think Adam Aaron is on the Epstein list. Well, if he's not, it might be because he's like not important enough to go to that island. Like personally, I don't know. He's done some shady stuff. Do you see the arcade trailer GameStop released a month or so ago? Maybe opening old school arcades with cash contests at GameStop. I saw that. I'm not sure if that was real, but I did see that. I'm not like, I don't know if that rumor is true, but that would be pretty cool.
If it is real, they better watch out, because I can play some retro games, baby.
That you can. Know,
and so as can you. We should team up. We should team up. I don't know how, but we just go together.
Yeah, we're very far apart, but we'll try it. We'll make it happen.
Yeah. And we'll put it on walterfootball.com. We'll film it.
That's right. That's right.
Whole thing. Yeah, because we're both very good at retro games. So.
Oh yeah, 100%. Yeah. I'm the unofficial world record holder of Choco Island 1 of Mario Kart, the original Mario Kart.
That's awesome.
I've done the no extra hard speed run, not speed run, but run for Ocarina of Time. Like I beat the game with 3 hearts.
That's incredible.
Like toward the end of the game, you're just getting one shot all the time. It's so brutal. But no, that was fun. That was cool. That was a cool accomplishment.
Yeah, that's awesome. Well, There's for those who don't know, I can beat Super Mario World in 9 minutes and 43 seconds.
That's awesome.
Which is still a minute 58 off the world record, but anyhow, let's get back to the matter at hand here.
Yeah, any heavily shorted stocks you see squeezing soon? I'd rather just short like stocks that are diluting like that. I think that's what you can do. Like that CRWV stock, which I brought up for a second, and we'll get to the cover call stuff in a second. But this stock, CoreWeave, they are an IPO, and on September 24, I believe, I'm gonna check the date. They are lockup expiry ends, which means all the IPO holders will be able to sell their shares. And so this is going to, I think, plummet. It's already plummeted. I think it's going to plummet some more. Some analysts put out like price targets for some stocks. This CoreWeave stock has always been over 100. Like I think it hit 200 plus at some point. Someone put out on Friday or Thursday. Someone put out a target price of like $29 on this. So you'll be able, like, if this goes to $29, every contract you buy will be worth like $1,000 or something, 1,000x or something. I don't know exactly how that works, but it might be 10,000 actually, or more. Like you'll be able to just make it save money. Like if you look at this example, like right now, this is $750, $755 to buy, which is pretty expensive. It's expensive because people know this is going to go down. So if you look at like 123, if you go to like as high as you can go, how high can we go? Let's say you shorted this back when it was 200 plus at like or even 280. If you did this is $16,000. Let's say like when the stock was like $280, you're like, I'm gonna buy a put for 280. Like you bought at like $500, and your options contract now is worth $16,000. Like that's how much money you can make if these stocks plummet. Obviously they have to plummet, or like like options are risky, but that's why I say buy long term. Like don't put yourself at high risk selling week or buying weeklies. I think that's you just make, but this just shows you how much money you can make if stocks plummet. And like I think CoreWeave is a stock that could certainly plummet. I think this one as well, VG, which is Venture Global, their lockup expiry is July 27, I think. You can find all this data online. This could fall, if IPO shareholders sell all their shares or sell some of their shares. Like they're just dumping shares at the market. That's what happened all the time with those SPACs like SoFi and Clove. Like the lockup expiry ended, and like so many people sold their shares, and that caused the stock price to plummet. So something like this, I think, could go down. This company right now is diluting. Progress Software, they're diluting. They have an S3 out. So there's their websites where you can see any any filings that are happening, and anything that says S, like especially S1 or S3, like that's dilution. And this company is diluting because I'll show you this. This is another funny one. Progress Software. They at least have positive net income, but if you look at their balance sheet, they have this is not good. They have 102 million in cash, and they have 2 billion in debt. So does that sound like a healthy company, Tom?
Oh no, not at all.
No, not at all. So that is that's not good. So I don't have a position on this, but I think I'm going to early next week going to try to find a good price on a put. So any company that's diluting, any company that has financial difficulty, you buy puts on something and like date it like three months out or something. It's gonna be tough for you to lose money on it. Like there's a good chance that if they dilute, like you're gonna make sick amounts of money because the stock just plummets. Even if they don't dilute, like there's not gonna be a lot of enthusiasm in the company. So you can still profit from it. Just don't buy weeklies. That's all I urge. Don't buy weeklies because it's so risky. At America versus AMC to ICE facilities. That's awesome. Were there any figures on how much better is made betting on the Chiefs all year versus what they lost in the Super Bowl? I don't have the data on that. Maybe we can ask Grok later or something, but I don't know that. Grok actually recommended CRWV along with RKLB and Jobby. They're spot on for those other two. They've been going crazy recently. Oh, the other two. Okay, yeah. Well, you might want to ask Grok about the lockup expiry with Core Weave because that's gonna be a problem. Quick off topic: have you been Cedar Point? Went for a week and rode the coaster 420 feet tall, 120 miles per hour, a new tilt coaster? I have not. Have you, Tom?
No, I know of it though. It's in Ohio, right? Like they say, it's like one of the best parks. They have some of the best coasters, but
Mm-hmm.
I actually haven't been there myself. But I'm aware of its of its prowess.
Yeah, it's been a while since I've been to amusement park. I just with two kids, I can't go. Like
Hmm.
we did. Oh, sorry, we did go to Sesame Place for my son's birthday, but I don't. It doesn't really count. Like it's more for them, for the kids, not for me.
Hmm.
For myself, I haven't been for a while. Like ever since my kids were born, which was like almost coincided with COVID. Like COVID's 2020. My son was born 2021. So, like last time I was at a park like that was before COVID. So I just never had a chance. So, I would love to go again. It's just been a while, and I need my kids to grow up for that to happen.
Hmm.
Have you had any experience playing reverse split plays? Yeah, those are pretty good too. It's another company I want to get to real quick. Lucid, which is a electric vehicle company. Their stock used to be worth a lot more than this. So I think it was like in the 50s and 60s. It's now $3. They have a lot of financial difficulty as well. Let's look at them. Let's look at their metrics real fast. Lucid Group. Um, they look at this net income. This is
Oh,
so
wow.
brutal. This company is just hemorrhaging money. Annual, same thing. Like this company is losing a lot of money. Look at the balance sheet. They have it's not like too bad. They have 3.6 billion in cash, 4.3 billion in debt. So more debt than cash is not good, but they just don't make any money right now. And they are doing a reverse split. They just announced that on Thursday or Friday. I don't know when that's going to be yet. They will have an official date on it, but like when they announce it, usually what happens is like there's a run up to it. And I think people do that to make the options cheaper. And so, like right before they do the reverse split, I'm gonna buy a crap ton of puts. And whenever there's a reverse split, like 99% of the time, the stock just plummets, just because it just gives like people get scared. The price like moves a lot faster. People are selling. Shorts attack it like crazy because anytime you see a reverse split, like it's kind of like signs that a company is not doing well at all. Like you want the opposite. You want a company to split. Like GameStop split 4-1 back in 2022. I want to say, but no, Lucid is doing a reverse split soon. Like I said, I don't know when, but it's something I'm monitoring. So like once. Like the day before the reverse split, I'm gonna buy a ton of puts for this. So that's definitely something that you should watch out for as well. Um, there are tickers that heavily dilute, but then are pumped to outrageous levels. Yeah, you have to worry about that. But like once the dilution's over, that's usually when they pump. So you have to just make sure that you're not buying at the end of dilution, which is when it could go up. So that's something else you could do is like look at earnings. If like a company has great earnings, they'll usually go up for a few days, or if a company has terrible earnings, like they'll drop a lot, but they'll still keep going down. That's something you should look out for buying options. I think my friend wants to go work for Lucid, then bailed before the stock tank. Oh man, yeah, I feel like they're going to lay off a bunch of people. It's pretty sad, but a lot of those EV companies, like they just never lived up to. Obviously, Tesla did, but like the other ones, like what was it? I can't remember. The one with Henrik something or other. I can't remember exactly what it was. It was the ticker was like Spark or something, and then it changed. I can't remember right now, but a lot of those EV companies just Mullen's another one that's like if you invest in Mullen, like you're just sad right now. Any of these EV companies just like went bottom up, and I feel like the same thing is going to happen to AI. Like there's going to be like a few companies that are great with AI, but like a lot of them are just going to bottom out. Lucid has a store at the mall in DC. I was shocked to see it. You are thinking a Fisker. There you go. Thanks, Patrick. Fisker. Yeah, FSR. They went bankrupt. They went bankrupt. They're not even listed anymore on the stock market. So that was Fisker. It was like $30 a share, and now it's like zero. So imagine how much money you can make shorting that. So
Wow.
um, okay, let's get into the meat of this. So we're talking about buying options, which like you can make money. It's risky. There's risk to it, but like, what if I told you that you're going to be on the other end of it? Like, instead of playing the casino, you're going to be the casino. And so what I mean by that is, and we're going to start with cash secured puts. Like I'm sure some of you've heard of covered calls, but like cash secured puts are actually better, I think. And Evan kind of attested to that too. So if you're looking to buy a stock, let's just say you do the research on GameStop, and like we did this already with these bad stocks. Let me show you what a good stock looks like. And like you're like GameStop's a good stock. So net income's not great, but it is positive. And if you look at the balance sheet, they 6.39 billion in cash, 7.5 in assets, 2.52 in debt. So they could just pay off the debt right now, and this debt is at 0% for like 6 or 7 years. So they could not pay this. They don't have to pay this off for like 6 or 7 years, and there's no interest on it either. So this is a very healthy company. And so if you do the research, you're like, I want to buy GameStop. It's 23.30 right now. What you could do, you could just enter 100 shares or however many shares you want to buy, and you could just hit the buy button, and that's okay. But there's a better way to do it, and that's selling cash. Or it's doing it via cash secured puts. So instead of buying stuff here, like buying puts, like we were talking about before, you want to sell puts. So let's just say you're like, I don't want to buy GameStop at 23.30. I want to buy GameStop at $23. So what you do is you go to the bid here, and it's like you saw before, this is 33.34. So you sell this. You don't buy it. You sell this for $33. Remember 33 cents times 100 because you're doing this now. If you want to buy 500 shares, it's 33 times 5. Or if you buy 1,000 shares, 33 times 1,000 times 1,000, which is 33 cents times 1,000, which is $330. You just get this money, like it's just yours, and I just do it right now. So actually, let me show you what it looks like. So you do 33. And then it says like estimated, there's commission 50 cents. So you get 32.48. Like as it says estimated proceeds, you get this money right away in your account. Like there's no strings attached. You just get this money. It's yours. It's a T+1 settlement. So the next day you can withdraw it, you can reinvest it, you can do whatever you want with it. It's yours forever. You never have to give it back. So you're like, okay, so what happens? So basically what this says is, remember, the strike price is 23 and the date is July 25th. So this says if this stock goes below 23 by the end of trading July 25th, 2025, you have to buy 100 shares, or like there's one right here. If this was 3, you'd have to buy 300 shares. If this are 5, you have to buy 500 shares. And keep in mind this estimated proceeds going up. Let's just keep it a 1. You have to buy 100 shares of GameStop at $23. That's the catch. And you're like, but I was going to buy 23.30. So I don't understand what's the catcher? And there is no catch. If you're going to buy this already at 23.30, you can get paid $33 for buying this at 23, not 23.30, not more, but less, $23. And even if you want to change the price to say, I want to buy it at $22. Well, you'll get less money. It says $10. So limit $10. So yeah, you'll get $9.48 in your account like right away. And this says same thing as the other one, except for 22. This says if this goes below 22 by the end of trading July 25th, 2025, you will be forced to buy 100 shares at GameStop at $22. And so you might be thinking like, okay, what happens if it doesn't go below 22? Or let's just go back to our 23 example. If this stock does not go below 23, let's just say hovers at 23.30 or even goes up, you will not buy the shares. And so what happens in the end is you just keep this money. Like I said, you keep it no matter what. You get the $33 or 33 times at whatever, however many contracts you buy or sell. And that's it. Like that's all there is to it. Like it's free money. If you're going to buy the shares already, you get paid to buy at a lower price. And if the lower price doesn't get reached, you just don't buy it. And then next week you just do the same thing. And then if it doesn't reach it, next week you do the same thing, and you keep doing it until you actually buy the shares. And in the meanwhile, you keep getting this money for free just for entering this deal, which is an amazing deal because you're going to buy it at a higher dollar price anyway. So does that sound legit to you?
So let me make sure I understand this. So like you kind of don't. So like how okay, you could keep that, what was it, the 30, 32, 48?
Yeah, let's do 3 contracts here. So let's kind of multiply. So this says you would buy 300 shares. Remember, 100 shares is for each contract. You buy 300 shares at 23. If the stock goes below 23 at the end of trading July 25th, 2025, and you keep this is 33 times 100 minus the commissions, so 97.45.
So you're either going to get the shares at a lower price or keep the money.
You keep your money. Well, you keep this no matter what. You keep your proceeds no matter what. Even if this goes to below, like no, if it goes to 100 or 0, you keep your 97.45 no matter what. Obviously not going to go to 0, but yeah, that's you. That 97.45 is yours no matter what. There's no strings attached. It's yours forever.
But you're paying $102 to buy it, right? It's 34 each.
No, you're getting paid. You're not buying anything. You're selling. This is a sell. The buying the options, buying puts. What I was talking about before, that was the first segment of this. If you like, you're buying put contracts, and you think the stock's going to go down, that's when you buy put contracts. This is selling put contracts. And the only catch is you need to have this money, the amount of money in your account.
That's what's going to be my next question. Now I understand.
Right. So if you're trying to buy 3, you need 300 times 2330. So what is that? That's you need to have $6,990 in your account.
$7,000 basically.
Yeah. So if you have that, if you're going to buy it anyway, if you're like, hey, I love GameStop, I have a bunch saved up, I'm going to buy 300 shares of GameStop, you might as well do this, and you can get GameStop at a cheaper price, and you get this on top of it. You get the 97.45 on top of it. So and I this is what I taught Evan, and he's like you just get paid just to buy cheaper shares of stuff you're going to buy in the first place. I'm like, yeah. And he's like why don't people do this more? And I'm like, they don't know. They just don't know. It is wild. Yeah. So this is like the first step. And there's more to this. There's a lot more to this. So
and then I guess the risk is, okay, say you got it. Okay, well, I was going to buy it at 23.30, and then it did go below 23. Now you got what you wanted at a cheaper price.
Mm-hmm.
Then the risk could be, like now you have all these extra shares, and if it drops to like 15 or something, then like that's the risk, right?
Well, yeah, of course. Yeah, look, we have this question here. What if it goes down to 20 though? Do you still have to buy to 23? This is what I'm saying though. This applies to like if you're going to buy the shares anyway. So in this example from NASCAR All Out, if you're going to buy, let's just say you don't do this, and you're like, I buy 300 shares at 23.30, and if it goes down to 20, you're going to be down on your position, right? If this goes down to 20, yes, you'll have to buy 23, but keep in mind what's better. It's just, let's just say GameStop goes from 23 to 20. What's better? Option A, or not, like number one is like buying shares at 23.30 and then seeing it drop to 20, or buying shares at $23 even and getting the $97 and seeing it go down to 20. What is better? Like buying cheaper shares and getting money, or just buying shares and then either scenario plays out.
Really interesting. But it's like, is it like this is probably a stupid question, but is it like instantly sold the minute it hits the threshold of 23, or like you have till the end of the week?
Sometimes, like very rarely, they will exercise your contract. It doesn't. It's only happened to me once, but not in this. I'm going to show you guys something else that's kind of cool later on. But doing it this way, that has never happened to me. And like, I've seen it go like way past, like the one time I got burned on it, like quote unquote burned, I was going to buy shares anyway, was when Ryan Cohen, he did that dilution. It wasn't really dilution, but like he did that, and the stock went from 28 to 23, and I think I had like $26 puts on it, and so I got the shares to 26, but it went down to 23. But the alternative was buying at 28. So like, what's better, like 26, buying shares at 26, or buying shares at 28 if the stock drops? Because I was going to do it anyway. And like this is the whole point. It's just like if you're going to buy shares of a company, then instead of just buying the shares, you do this, because it's so much better. You get a cheaper price, and 2, you get the premium on top of it. You know what I mean?
Right. I see what you're saying. Oh,
Yeah,
that's really interesting. So
right.
what? So I was going to say. So what's? Tell us about the covered calls, but I didn't want to cut you off. You had more to say. I'm sorry.
Yeah. Oh, let me just read this one. I admit I never fully understood options. It seems like people focus 9% of the time when the trade works out. 10%, it doesn't lose your count or something crazy. Yeah. Look, I mean, there's a difference between buying and selling options. Like the first segment we did was buying options, which I said was very risky, but you could kind of mitigate it by going 1 to 2, 3 months out. In fact, in a in a bull market, if you go like 3 months out on SPY contracts or whatever, like Amazon, Tesla, etc., like your returns are going to be really high. But if you go a week out, like you're putting yourself at major risk. So yeah. So this is what I'm talking about. The selling options. There's zero risk to this if you're going to buy the shares anyway. Like you just it's all upside. You get the money on top of it, and you get cheaper shares. So this is like the first step. So if you're going to buy GameStop shares or any shares of any company, you sell your options, you get your premium, you get a cheaper price. Okay, so let's just say we do this 3 weeks, right? And we just keep getting premium, and like suddenly GameStop goes to like 22.50 or something, right? And you get your shares at 23, and you're like, I could have paid, I could have waited and paid 22.50 as if I saw the future, or I got $23 shares. Now that you have your shares, let's get out of this. You go to, instead of the put side, you go to the call side. You're going to sell covered calls on your shares. Now you go, let's just say it's 22.50. You go out to, like, let's just say $24. You sell this, and you get $24. I'll show you this. So like 3 limit 24, always do limits. You will get, again, estimated proceeds. This is not a cost. You get $70.45. So let me explain what this is. So basically, this you do when you have the shares, not when you're trying to buy. You already have the shares.
And you need to have 100, right?
Each contract's 100. So let's just say you have 300 shares, or even like if you have 350 shares, you can only do 3 contracts. Once you reach 400 shares, you'll be able to do 4 contracts. In fact, this is my son. No, wait, it's my son's account. I'm building up his contract, his portfolio. He started GameStop with 100 shares, and he's at 253 right now. And I'll tell you, like, it's pretty remarkable that his account, it says like average price pays is 27.87, as it's down 16%. Despite his position being down, he's up like $2,000 in the past year. Just from getting the premium and using the premium to buy more shares. Anyway, so this is step 1. Like I said, selling cash secured puts. When you don't have the shares, you want shares. Now, this step 2 is when you have the shares, you sell covered calls. So this basically says if the stock goes above $24 by the end of trading July 25th, 2025, you will sell your shares at $24. Now, there's the downside, which is like if the stock skyrockets like 80, you still have to sell your shares at 24. So you will make money each week doing this. If the stock is stagnant, you're just going to keep making money each week. It's a good source of income. Now, if you own a stock, you should probably read up on it, like, at least once a day or once every 2 days, kind of like see what's happening. If there's like a lot of momentum, like maybe you don't want to sell your cover calls, or at least go out further than $24. It's to say, like, you're like, oh man, I really think GameStop's gonna have a great week. I don't want to do 24. Let me go to like 27. Let's just go to 28. Like, you're gonna get a lot less money. Like, it's $5 per contract, but it's still $5. So you kind of have to like weigh, like, where do you think the stock's gonna go, and if there's a lot of interest, this premium is gonna be a lot higher. Like, especially around earnings, like these premiums skyrocket like a lot. So it's basically a way to make income as you own your stock. It's basically like giving yourself a dividend for each stock, and it adds up. I mean, like, if you take like let's just go back to the $24 example, and really, like, the 23 put was basically the same thing. Like, it was $33 here, $24 here each week. If you just, let's just do $24 each week, you do it for every single week this year, you will make $1,248 on a $2,300 investment, which is 54%. It's you're basically giving yourself like a 54% dividend here. And like, there are stocks where like their dividends like 8% or 7%, and people like go crazy with it. Like in the bond market, when it reaches like 5%, people are like, oh, let me invest in 5% bonds. Like this is 54%. Like this is like so much more money. And like again, if people knew about this, then they would do it, but they don't just because they're not educated. So
and you always set these a week out.
That's what I prefer. Like if you go further out, again, these contracts could be worth a lot more. If let's just say you go to August 15, that 24 is gonna be $91. So you can do that, but like the downside of doing it multiple weeks out is that there could be some breaking news that happens, and like you don't want to sell your shares at 24, or like some stuff happens, and like you just like. I'd rather do it each week and like monitor each week. But like I've heard the argument, it's like someone's like, I'm so busy, I have no time to look at this. I just want passive income. I'm like, I get it, but like if you just micromanage it, you could do a lot more. So if you think about it, how many Fridays is this? This is 4 Fridays. So 24 times 4 is 96. This is 91. So you actually make a little bit more each if you do it each week. It's not like a crazy amount more, but it's still more. So if you do it each week, you will get more money in the long run. It just takes a little bit more time, but like this really doesn't take much time. The research and stuff like that's like the bulk of it. Like you have to find a stock you like. It doesn't have to be GameStop. If you love like Amazon or Tesla or whatever, you could do this with any stock that has options. I like GameStop. Like one, I love the company, I love the CEO, and like two, the premiums are higher in GameStop just because there's a lot of enthusiasm. Like people buy calls all the time. If people are buying calls, you could sell your like. Imagine it this way: like if people are buying a lot of stuff, you're going to be able to sell it for more money. So that's why I like GameStop for selling covered calls and cash secure puts. So basically, this is something they call the wheel strategy. Some people do that. So you don't have your shares, you sell cash secure puts. You do it over and over again until you get your shares, and then you sell covered calls once you have your shares, and you do that until you lose your shares. And then you sell cash secure puts again. It's just like this whole wheel. It's like a wheel strategy, and it's a great way to make income. Now, obviously, you're gonna have to pay taxes on this, so you pay tax on any money that you get. That is, I guess, the downside. But like, what are you gonna do? Not make money? It's like you have to pay the government in one way or another, unfortunately. Yeah. But no, this is basically the wheel strategy, and I love it. This is something I do all the time. I've been doing it for 2 years. I've been doing it for my kids' accounts. Like I said, my daughter's a better example. She's had her account for 11 months. She started. Let me pull it up. So I can show you like 1019. Her account's like 1019. Again, she's 168 shares. She started with 100. Paid average price is 27. She's down 13% or 14%. She started with $3,100 in her account, and her balance now is $3,900. So she's gained $800 on a stock that's down 14% for 11 months. Like, that's not good. It's a great way to build income. It's a great way to get weekly income. And again, people don't know this stuff. It is free money in the stock market, and there are no strings attached. There's no added risk. I said there's no risk. There's no added risk. Obviously, there's risk to anything. You go out to the supermarket, you could get hit by a car. There's risk to anything you do in life. But like if you're going to buy shares anyway, there's no risk attached to this. It's just upside. So right. Yeah. And so any questions? I mean, there's more to this too.
Yeah. No. I mean, I think I'm definitely going to start trying this though.
Yeah. I think there's definitely a lot to this. And
oh no, now I'm going to be texting you every single night, Walter, for help.
Hey, look, that's fine. I love teaching people this stuff. I think a lot of people, if anyone in the comments you want to reach out to me, definitely ask me anything here. I think it's super important to know how to do this stuff.
We should talk every day.
Yeah, why not?
See, I just want to, we can talk about our feelings, and now I'm just joking. No, but in all seriousness, to segue into something else, I wanted to map out, because we're going to do the circuit contest this year. Yes. I'm sorry, we can go. I don't mean to take us off topic. We can get right back to this. Mm-hmm. But we should set up a different a schedule of more than we have in the last couple of years, because that first year I feel like when we did really well we were in better communication.
Okay.
Like,
would you be asking on the spot? Would you be interested in taking Evan's Tuesday slot, because Evan's going to move to Thursday?
Oh, Evan's going to move to Thursday. I mean, possibly. I mean, we can talk about it after, but I mean,
Okay.
that might not be a bad idea. I filled in on Tuesdays a couple times before when Jacob.
I miss Jake. I miss talking to Jacob. He always have some nuggets that I never considered.
Yeah, it sure does.
Yeah.
Yeah. Well, but anyhow, let's get back to the matter at hand here. Sorry, everyone.
Yeah, I'm just putting you on the spot. Hey, want to take over Tuesday?
Yeah.
I've been trying to like figure out what I'm gonna do. Schedule, like, obviously you're Saturday, and Evan's gonna move from Tuesday to Thursday because he's gonna be busy on Tuesdays. Like if you do Tuesday instead of Saturday, I can get Andy on Saturday. Like, just makes sense. I don't know. I mean, if you, we'll talk about it later.
That might not be a bad idea. But,
yeah. I watched the Kenny StreamYard full screen video from 2 weeks ago. I can count on one thing's funnier that I've seen next to the McCarthy rant. That was hilarious. So Kenny, if you're listening, definitely feel free to chime in. I don't know if you saw that, Tom, but like,
no, I'd love to see that though.
This is real quick. We were doing a fantasy draft, and Kenny's like, I can't see the screen, and I'm like, well, are you enlarging it? He's like, you can enlarge it. It's like, yeah, like you just hit the enlarge button, and he's like, I never knew that. I'm like, dude, you've been squinting at the screen for 7 years because we've been using StreamYard for 7 or 8 years. And he's like, yeah. It's like,
wow,
it's so funny.
Poor guy.
Yeah, it's great.
We should start making clips for like YouTube Shorts to advertise the show.
My developer used to do clips for YouTube all the time, but like it's hard. Like, he has to go through 2 hours worth, each day, and find these clips. It is time consuming. And he's like, I can do it, but like then that's 2 hours that I'm not doing other stuff. And I'm like, yeah, that's I'd rather him work on the stuff on the site and stuff and make it better.
We just clip the Quacky clips, the Quacky show clips. So I'll do it. I'll write down what we need to clip. Yeah, I think it'd be a good. Anyhow, sorry, I don't mean to get, but like we could clip Kenny's McCarthy rant to get more people to watch.
Yes. Yeah, that's that was. I wish we still had that. Unfortunately, it's gone into the ether. Kenny had to delete all the gambling shows because he went to higher education, and so I didn't realize like which one it was when I deleted it, and then like afterward I'm like, oh no, I deleted the McCarthy rant. That was one of the most epic clips of all time. He just went on a 10-minute rant about how much Mike McCarthy is just an awful coach. It was like it's so good, and someone's like, you should have him recreate it. I'm like, it won't have
it won't be the same. Yeah, it has a different momentum,
Yeah, no, it was a natural thing. Whereas like this time he'd be forcing it, so it
absolutely. I'm with you.
Yeah,
but we could. I mean, think of some of the nuttiness that we talk about on here. Like, imagine people are like, okay, like there's more than sports,
Mm-hmm.
Here's this.
Oh, yeah. It was right after the Packers lost to the Cardinals, and he got fired. Yeah,
I remember that 2018.
Josh Rosen beat Aaron Rodgers somehow. that's
2018. I remember that.
That has to be like one of Aaron Rodgers' like lowest points of his career. I'm not talking Jets era, but and like with the Packers, that might be his worst moment, losing to Josh Rosen. I can't think of something worse. I don't know.
That was rough. I remember. Yeah. I mean, that season was already. Remember that it started out so promising. Remember they came back. They're down 23 to 3 or something to the Bears on that Sunday night game.
Yeah,
and Rodgers got hurt, and then they came back. He threw that. It was a relatively short pass over the middle to Randall Cobb, and he took it like 65 yards or something.
Yeah,
and the Packers came back and won 24-23, and then they tied the Vikings the next week. And I was like, like maybe the season will be fine, and like they just couldn't stop losing. Yeah. Patrick, you have to take a shot. Oh no, wait, that wasn't more than 10 years ago. Geez, that was 7 years. 7 years ago, though. Yeah. Holy smokes, man!
Yeah, time flies, huh? The Broncos game where he had 80 yards. Wasn't that a Sunday night game?
It was a Sunday night game. That was 2015. Take a shot for that one. That's 10 years ago.
There it is. But that,
that was the Broncos. That was the year the Broncos won the Super Bowl.
Right. That was a horrible game. But like he was battling Denver's like elite defense,
Mm-hmm.
And Peyton Manning was on the other side. like not vintage Manning, but still like decrepit Manning. Still decrepit Manning was still like a functional player, whereas like Josh Rosen, like how do you lose to Josh Rosen? That is even worse. You know,
Oh, I know.
the
Which
Cardinals playoff
one?
game was one of the best ones I ever watched. Freshman year of college, now at the finished college and grad school, time flies.
Which one? The one with the Rogers Hail Mary or the 51-45 game in 09-10?
I assume it's the Hail Mary one because
Yeah,
the
two
09 was,
great.
yeah, it was so long ago. Like that was Patrick's been in school for like 16 years.
Hey, you never
Uh,
know.
yeah.
Well, the Hail
Yeah,
Mary one.
yeah.
Yeah, well, I'll tell you what, those are two games where the defense gave up over either 30 or Aaron Rodgers didn't get to touch the ball again. And that happened like 6 different times in his playoff losses, and one respectively for each scenario. And that was, I mean, first of all, those are both games Green Bay should have won. That 51-45 game, that was a face mask. I don't care. And like I was surprised. That was a great game. Like the Packers were down by I think 21 at one point, came back and tied it. Rackers missed a pretty easy, a cheapy field goal, like a 38-yarder, 35-yarder, to leave the game tied and send into overtime. And then when the Green Bay got the ball, it's like, I can't believe this. They were good that year. They were 11-5.
Yeah.
And then that fumble recovery for a touchdown. Cardinals were coming off of their Super Bowl appearance the year previous, and then that other game. I think we talked about this last week. It's because, oh my God, don't tell me his name. I can't think of don't tell me the Vikings kicker that missed that field goal in the Blair Walsh, that 10-9 game. If he had made that like 22-yarder, like Green Bay would have played Carolina instead.
Yeah.
I was wondering, man.
Yeah, but they wouldn't have played Arizona anyway, right? In the next round.
Yeah, they should have won that game again. That was a great game against Arizona, but what a letdown it was. I mean, there you go. Rodgers didn't get the ball again. Yeah, there you go. Yeah, I think there's this stat that Green Bay lost. Like, I mean, I can think of 3 right off the top of my head where they lost on the last play of regulation or overtime. I can think of 4 off the top of my head.
Yeah.
Green Bay's, for all the years that they've had good teams, they've had some tough experiences too, man. Two overtime losses to the Cardinals. They lost in 13-14 on the last second field goal to the 49ers. Of course, the 2014 NFC Championship game, man. They've had some baddies.
Yeah, well, at least they got to win. Some of these organizations have never won. Like, look at the Vikings; like they came close a few times, and they've never won. Bills have never won. I feel like one of them is going to come through. I feel like this year maybe. Like, what if it's Bills Vikings Super Bowl? Like, someone told me that like the Earth would explode because that means one of those teams will have to win. Or like, what if it's a tie? Like, obviously you can't have a tie in the Super Bowl. What if it's a tie somehow? Like,
what about the Superchargers? I'd love to see the Superchargers win.
Yeah, just their ownership's not great. Like they're just so cheap. They're not as bad as the Bengals, but they're still a cheap organization. So like those teams will just never win because they just don't go all out to win. The Bengals are a disgrace. What they're doing with Hendrickson and Shamar Stewart, like their first round pick's going to go back to college. Like it's embarrassing.
Yeah, that's
easy under. I think I was actually something I was doing today, and this is a topic for another week. But like I was looking at I was writing down over unders for each team in each sports book, and like Cincinnati is like 9.5. The best one I only looked at 3. Like they're under 9.5 is plus 125 at DraftKings,
wow.
which seems absurd. But there's actually like an arbitrage opportunity for some of them already in just 3 sports books. Like for example, Cincinnati is 9.5 minus 120 over on FanDuel, but they're under 9.5 plus 125 on DraftKings. So like if you bet both, you can't lose money. Like you win $5 if they go under, or you just get 0 if you go over. Obviously, you have to tie your money for like 5 months, but still, there are better examples. I can't remember which one off the top of my head. Like Dallas 7.5. Over Dallas over is 7.5 minus 125, and Dallas under is 7.5 plus 150. The over on FanDuel, the under on BetMGM. So that is like a 25-cent arbitrage, $25
Wow.
arbitrage, which is crazy. So if you bet the over, if the over hits, you don't win anything. If the under hits, you win $50 for each $100 bet you make on both sides.
Wow.
So it's like $200 to make either 0 or 50. So you get a 50% chance on a 25% return. So
Yeah.
if you average that out, it's 12.5% return on 5 months, 5 months or so. It's pretty good. It's better
Yeah.
than those 5% bonds we were talking about. You know, I don't get that. Oh, 5% bonds. Oh, so exciting. It's like, no, stop it. You guys are stupid.
Hey, well, do you want to get? Oh, did you have more to go over on the stock? Because that's a perfect segue into my.
I do.
Keep
Sorry
going,
to
keep going, man.
sorry to
Oh
ruin
no,
the
it's okay.
segue.
No, keep it rolling.
There are certain things that you keep in mind. I mentioned this briefly. When a stock goes toward earnings, there's a lot. The premium increases a lot. Let me show you a particular stock. I'm not advocating to buy the stock or anything. And again, like this selling cover calls to cash puts is financial advice. 100%. You should do it if you want to buy stocks. Like I fully endorse this. You can't lose money on it. On top of like what you're going to do in the first place. Like you can't lose money here. It's just impossible. What I will say is not financial advice is like any stock. So like GameStop is not financial advice, for example. I love GameStop. That's what I'm doing. It's just not advice. And QS, certainly not financial advice. I have not looked at their fundamentals at all. I'm not going to buy the stock. I'm just saying I just saw the premiums and they really stuck out to me. So QS, which is QuantumScape, their earnings are on July 23rd, so before July 25th. So you might notice that these premiums are through the roof. So like so if you're like, I want to buy 100 shares of QuantumScape, 1467. So instead you go like, okay, I'm going to buy them for $14. Look at this premium. It's 113. So times 100, just buy 100 shares instead of 1467. You buy 14. You get $113. So remember GameStop, it was 33 cents, so $33. This is $113. So that is something to keep in mind when earnings come around. These stocks skyrocket, or sorry, the premiums on these options skyrocket. And what you could do now, this has risk attached to it, unlike the other stuff. But what you could do is like theoretically, if you find a stock each day or almost each day that has earnings coming up, and they're cheap enough where you can get a bunch of them and sell the contracts, what you could do is, for example, you can go like way out, you can go way down, you can go like $12 and get like going from 1467 to $12, you get $40 per contract. And like, yeah, that's not as much as GameStop. This is one day. What you do is you do this for one day, wait to earnings, and then once earnings are reported, this will plummet. This will absolutely plummet. People play options all the time for earnings. Like they'll buy contracts, and what they don't realize is these premiums are juiced up. And so like if nothing changes on earnings, like if it stays the same, this will go to like 5 cents. Actually, this go to 0. So like if you buy this, it's a huge risk. You have to have this plummet below $12 for you to make money. Like actually 11.60 because you subtract 40 from 12, 40 cents from 12. So like if this plummets to like $10, you'll make money on this. But like if this goes from 14.67 to 13, and I've seen this all the time for people, like they'll be happy. They're like, oh, I bought puts. This $14 stock went down to 13. I'm gonna make money, and then they'll lose money on the option. It's because like this premium is so jacked up in price that like it has to move a ton for you to make money. But like I said, if you're on the other side of this, if you're the casino instead of the casino player, you get to just keep the $40 at 12. The downside is, yeah, you have to, if this plummets to like 10, you'll have to buy shares at 12, and like you just have to make sure that you really want to buy shares of this company. There's risk attached to it, unlike the other stuff, but there's a lot of potential for money here because instead of doing $33 a week for GameStop in that example, this is $40 a day. So if you do it 4 times a week, and if you get the same sort of contract, that's $160 per week instead of $33 like in GameStop. Like that's how much money can be made playing options on the other side, like selling options heading into earnings. But you can get hurt. So like if you plan to do this, my suggestion, I've done this sometimes. Like I've done this like BlackBerry, which like people like BlackBerry, like why BlackBerry? They're like the phones. They're like the BlackBerry is actually a cybersecurity company now. They don't make phones anymore. So I did this with BlackBerry. Their premiums were juiced up because their premiums coming up, but like I know BlackBerry is a company because I used to invest in them, and their earnings are always positive. They're always they always exceed EPS. They're a growing company. They're making more money each quarter. I was confident that it wasn't going to go down, and it didn't. So I was able to pocket like good premium for a day. If you do the research on QuantumScape and you're like, okay, this is a solid company, I don't think it's going to go down. Even if it goes down a little bit, like it won't affect you at all. Like you'll still pocket the $40. That's something I would do for this, but that takes time to like research each company. Like sometimes you're going to find some turds. Like some companies, like there's a company called HELE. I was actually shorting this company. So it's a kind of like an unfortunate story here. HELE, I believe this stock was, I want to say $32 a week ago, and I bought puts on Heli, like when the earnings are coming up, just because like they were like hemorrhaging money like crazy. And I look at their past earnings, like you can Google it and you can find like tipranks.com, I think has like good earnings data or history. And I saw like each earnings they're like disappointment earnings, disappointment, and like they'll even show you how much the stock drops after each earnings. It was like minus 20%, minus 20%, minus 20%. Like this company sucks. Like I'm gonna buy puts on this company. And it worked out. This company fell from like 32 to 24 like overnight, and it kept falling. It fell to like 2090 or something, and like my puts were like skyrocketing. And then I was like, man, I was like, how much is going to go down? And I looked at their last earnings, like they dropped from like 60 to 45 or something, or 42. It might have been even less. And I did like the math, and like percentages said this will go to 15. I'm like, okay, I'm gonna wait. I'm gonna ride it out till it goes to 15. Then I'm gonna sell my put contracts. And then unfortunately, when it went to 20 the next day, the CEO bought shares. Like a bunch of board members bought shares, and like, oh crap, it went from 20 to 23. So actually, I didn't sell it for that much. I profited off of it, but it wasn't as much of a profit if I would have sold the previous day. So obviously, like things change all the time, but like I think it's just a good opportunity just to like, like research stuff, like look at how much money they're hemorrhaging or how much money they're making, even if you want to go on the plus on the call side. Look how much debt they have, look if they're going to potentially offer dilution, or if they're going to do a reverse split, as one of the previous commenters said. There's like a huge opportunity on this, and like people just don't really put all the research into it. But yeah, as long as you're smart about the options and not buy weeklies, if you go like months out, like I was doing August 15, and this I sold a week ago. So like I bought these puts whenever they did their earnings. I think it was like July 12th or something. So I bought like, instead of July 15th, I bought August 15th. This is a company, by the way, that does monthly contracts, not or monthly options, not weekly. So you can see here the next one's September 19th. Just because like there's not a lot of demand for it. That's basically it for selling options into earnings. If you do research on stuff and you see the premiums are jacked up, then you can make a lot of money selling these options. And like I said, there's more risk to it, but like if you do the research and see like this company's doing well, like, oh, it's a company I'd like to buy shares of, then like there's no more added risk because you're going to do it anyway, and you're going to get even more money selling these options. So that's something I do each weekend, is like I look at all the stocks that have earnings coming up, and I like kind of like cycle through some, that are kind of in my price range. Like I'm not going to go to anything that's like $200, because like for example, like if you go to like Amazon and like see this is $225, right? If you buy $100, if you buy an options contract, that's 100 times this, which is $22,000. Like, if you have 22,000 lying around to do an options contract, you can do it, right? And in fact, like this is what it looks like. Like if you were like, instead of 225, want to do 220, you get $79. And like the percentages don't line up. You know what I mean? Like GameStop was $33 for a $23 stock. you would think if that correlated, this would be like $330 instead of $79. You know what I mean? That's what I was talking about with like GameStop. Their premiums are higher because it's it's a very like it's I don't want to say it's like a meme stock anymore, but there's just so much enthusiasm behind it that people are always buying options. And like I said, if people buy options, then they will certainly you'll be able to sell it for a higher price. If you want to do 220, 250, that's a little bit better, $135. 220, 225, which is like 97 cents below. This $223. So like this is a perfect example. If you're like, I want to buy Amazon, like if you're like striker rich, you win a DraftKings tournament, you like win 50K, you're like, I want to invest this money into like a safe company. You're like, I want to buy 100 shares of GameStop. Instead of buying 100 shares at 225.97, you buy 100 shares at 225 even, and you get a $223 on top of it. So this works for any stock. And if the premium, if the earnings are coming up, then this is going to be worth a lot more. So that's something else to keep in mind for earnings. There's another thing I want to talk about too. Do you have anything to add before I move on to that?
Oh no, keep it rolling.
Okay. There are something called I don't know butcher this. YMAX yield stocks, or like their ETFs actually. I want to get this correct. So they're called Yield Max ETFs. Some people may have heard of this before. Like this company is called Misty. It sells for $21.79 a share, and it doesn't look like anything special. You're like, what is this? Misty is MSTR, which is it's Michael Saylor's company where he just buys a ton of Bitcoin. That's like all he does. MSTR, by the way, is I think it's like 400 something. Yeah, it's 426 a share. Misty, it's funny. This company does what I just explained for the past 45 minutes. That's all they do is sell cash secure puts and sell cover calls on MSTR. That's all the CTF does. And like the catch is you get paid out. You get paid out each month. They give you dividends, and like it's not like 7% dividend, etc. Like it's significant, and I want to show you guys what they do exactly, and I will talk about how you can take more advantage of this as well. So real fast, let's go to this. Each week this will come out. They have YieldMax has an A schedule, a B schedule, a C schedule, a D schedule. Misty, I think, is C schedule, I want to say. There's a certain stocks that they have it on the website. It's not important to know which category it's in, but like it's more important to know when they issue their dividend. And so if you look at Misty, look at this dividend, Tom. This dividend pays 77%. So yeah, it says every 4 weeks. This pays out 77% dividend, which means you get $1.23. This is it changes every month, but in this example, you get paid out $1.23 per every share you have. That sounds too good to be true, right? And sort of. Go ahead. You're gonna say something.
Oh no, I'm intrigued here because you're right. That does sound too good to be true.
Yes. So what's the catch? You get paid out 77%. This one is 101%. This winter one is 65%. This XYZY is 56%. Amazon, which is Amazon, this is what they do for Amazon. They buy calls and sell calls, sell cash puts. 46% dividend. This seems like insane. Well, what happens is if you get paid out $1.23, the stock price will drop by $1.23. So let's just say if the dividend got paid out tomorrow, this would go from $21.79 to 2056. So you would gain the money, but you would lose money on your what is called the net asset value, NAV. And you're like, okay, so this doesn't seem great. There are two things to keep in mind. Like first, it gains money back. Something I like to do is so each month when their Misty contract, Misty stock pays out its dividend, the schedule is it's on Wednesday they announce it. Thursday, you have to have your shares at the opening bell to be qualified for the dividend. And then Friday, you get paid out. Usually, sometimes people get paid out before market opens. On E-Trade, I get paid out like at 3 a.m. the next night. Like I don't understand why, but I mean, that's not important. It's the schedule. Thursday is when the price plummets. Like this will drop to 20.56, like I said before. But usually happens is people see the stock price drop and they're like, oh, cheap shares, and they'll buy. And then like by Friday, it won't fully go back to 21.79, but like if it goes down to 20.56, it'll usually go to like 20.90 or 21. So like you will make a little bit of money on this. So I think it is worth it. I think it's not a bad strategy to have. But you can actually supplement this, and I've not seen anyone talk about this. You can actually buy these shares on Wednesday. I've done this before, and it's worked quite a bit. That doesn't work all the time, and I'll explain why it doesn't work sometimes. But you could buy. Let's just say you buy 100 shares of this, so $2,179. And don't do the cash script for this. You just buy 100 shares of $21.79, and I immediately go, okay, I'm going to sell cover calls in the 45. I'm going to get $45 in premium at $21.50. And okay, if this goes below, if this goes above 21.50, I'll have to sell these shares for 21.50. But we expect it to go down. Like it will go down. Like I said before, it will go down to 20.56. So I will collect my $45, as you can see here. Yeah, I will take the 44.48, and yeah, and what I will do the next day is, like, because the stock price drops so much, these calls will be almost worthless. So I will sell them back buy them back for like $5. And so it's really it's 45 minus 5. So I will collect $40 on each contract. And I will pocket the dividend minus it's the stock price drop minus the dividend, which I said the stock price usually goes up. So actually we'll buy calls on Thursday because I suspect it'll go up on Friday, but that's a separate thing. Let's just say this goes down from 20.56 and it goes up the next day to like 20. Let's just say 20.79 to make it easy. So this will go down $1, right? So you lose $1 per contract, or you lose $100 on your contract. On your shares. You lose $100, but you will get the 123 in dividends. So you're up 23, and you will get $40 on your premium. So you will make $65, which is much better than the GameStop $33 I was talking about before. I think the cover call was 24, if I remember correctly. So this is you gain $65 for each contract you take out on this. And there are different ones, like Coney's coming up this week. Misty is just the most known one. Coney is Coinbase. Same thing. They sell cash secure puts and sell cover calls on Coney. If you do Coney, you're like, okay, I will buy 100 shares of Coney. It's just cheaper, 10.35. And then let me pull up the exact the exact thing for Coney. This was last month. They're gonna have they're gonna have one this Wednesday, an updated one. So let's go to Coney. The announcement here. Coney's dividend is 73%, so you'll get paid out 53 cents per each share you have. So if you have 100 shares, you will get $53. So yeah, 73% sounds great. And we go back to the trading here. So what you can do for Coney is you buy 100 shares for $1,035, $1,035, and then you sell your covered call for $35. And again, you're going to buy it back for $5 the next day or so. This is increments of 5. That's why I say 5. So you'll net $30. So what happens is this 1035, this drops by, what was it, 53 cents. So this will fall to 982, I believe. Let me make sure I got that number correct. 53 cents. Yeah, 982. Yeah, this will fall to 982. So you lose 53 cents. You get the 53 cents back with your dividend, and you keep your $30 in premium. So, which is like, like GameStop paid like 24, or so I would do that. But keep in mind, This is only $10, whereas GameStop is 23. So if you multiply that by 2.3, that's like it's like $70 or so, which is a much better deal. So this is something I've done as well. Now this like is almost too good to be true too, right? Like this seems even better than the other one, right? You're like, oh, what's the catch here? Is like, can anything bad happen here? And truthfully, like nothing. It's the only way like this goes south is if again with the other stuff is if the stock plummets, which these are like Coinbase is a well-known company, like MicroStrategy is a well-known company, Amazon if you're doing Amazon one, these are well-known companies. So it's like it's very unlikely these companies are going to do dilution. Like these are known companies, so the stock's going to plummet. What could happen here, and this is kind of annoying when it happens sometimes, and it's like, I just wasted my time. Like the only downside here is you waste your time, which is like 10 minutes. Sometimes you will get it, your contracts will get assigned, and what happens is, like, if this goes to like 982 and you sell a $10 call, sometimes it'll get assigned and you'll be forced to sell at $10. So what really happens is you lose $35 from it going from 1035 to 10, but you will get back the premium, which is $35 here. So it's really nothing. Like, you lose nothing. It's just annoying when it happens. Like, it happens sometimes. But like, I'd say the success rate on it's like 65% or so. Like Misty, and I brought up that first example. Misty, I feel like it happens more often than not. I just did this for Babo, which is the Baba. It's just the Chinese stock. I just did this for Baba. And I did 8 contracts here, and seven of them went through. One of them got assigned. So I didn't lose any money on that. Like, I think I lost like $1 on it, or $2. The other ones I profited like really well. I think it paid out like and this actually like skyrocketed the next day. So actually, I didn't lose money on the NAV. I lost money on like this $15. I lost money on this, like selling the contracts, selling the stock at $15. But I actually made I want to say I made like $41 per contract that I did, I think, or maybe it's like 42. So this is something that's really lucrative, but like I said, it just gets annoying when you're like, oh man, my contracts were assigned. And so if your contracts are assigned, you won't get the premium, but you also won't lose money on the net asset value, like, or like the loss on the net asset value will cancel out the premium you get from the selling the cover call. I don't know if this is confusing. Am I confusing you here? Like, I feel like this is a weird thing for me, but this is something I look for every Wednesday. And like sometimes there's just not a good deal, but like oftentimes like there's something that you can do with this. So am I making any sense here? Or
no, it makes sense. It's just all new to me.
Yeah,
but I am following what you're saying though.
Okay. Yeah, this is something else. I have not seen anyone talk about this. I even Googled them, like selling covered calls on yield max ETFs, and like no one has ever mentioned it. And like maybe like someone's like, oh my god, you can do this, and like maybe people start doing it a lot. But no, this has been kind of like a secret thing that I've done, and I didn't know if it would work at first because it seemed like way too good to be true. Like, think about like making $42 on a $15 stock, like. That's 84 if you multiply by 2 to 30, which is like GameStop. It's a little cheaper than 30. So like, instead of like GameStop's $33, you get $80 for this. Like, and yeah, it's only once a week, but still, I think it's pretty good, and it's worked out for me sometimes. But like I said, if like it's usually 4:15 a.m. Like that's for some reason that's like the time when my contracts get assigned. So like whenever I do this every Wednesday night, like going to Thursday morning, and I'm always up late. Like if like 4:15 a.m. I log into my E-Trade and like, all right, please contract no sign. And then like if it's a sign, I'm like, oh, come on. And then like if it's not a sign, I'm like, yeah, baby, you're gonna make money on this. So so yeah, it's like I said, it's like probably a 65% success rate, which is like, again, if it's a fail, you like the most you'll lose is like $2 or $3. Like, you won't lose anything really. But like the upside is insane too here. So The website for this, for those interested in looking more into this, is hold on, that's not correct. It is pull it up right now. It is you can Google this. It's called yieldmaxetfs.com, and then they'll say like, yeah, this is so 716 distribution. It was Marrow. I don't know. Babo was not here, but Babo was one of them. Let me show you Babo. Babo paid out 38 cents, so 32.17% dividend. That's not even that great compared to the other ones, but it's still like that's how lucrative it is. Like I got paid out pretty well with this. And look, if you think that like one of these companies is really good and you want to stick with it, like, you know, for example, Nvidia, this one pays out $1.02. Or this one's actually I have like one share randomly in like one of my IRAs, and this pays every week. This pays out like 256. Sometimes it's more, sometimes it's less. On average, probably 256. I bought. I just wanted to see how this would work out. I bought this about 3 months ago, I would say, and I'll actually show it to you. I think this is in my traditional IRA, if I remember correctly. Let's see. What was it? PLTY. So this is Palantir's. Maybe it's in my Roth. There it is. Like I said, I have one share, right, at 70.72. So I'm down 5% on it. But I've had 3 instances where I've been paid out an average of $2.50 a share. So if you think about it, I'm down like $3, but I got paid out in total $7.50. So like I'm way up on this comparatively. I just wanted to see how it worked. That's why I only have one share. I just wanted to see how it would work out. And again, like you can sell cover calls in this. When the date comes around, you go like, oh, you get $2. It's more expensive, but still you get $2 for this contract. Which it's insane. Like it's crazy how you can take advantage of this. So that's something else. But even if, like I said, like if you like Palantir, if you like some of these other companies, like you could just like hold on to these. Like some people do this and they collect monthly dividends. And again, like the one downside is you have to pay taxes on it, but like I said, you pay taxes on everything. So yeah, so that's I feel like that's most of what I had in mind. I feel like I'm forgetting one thing that I wanted to mention, but yes, I spoke for an hour about or actually like an hour and 20 about this stuff. So I hope you guys were able to enjoy this and hopefully you benefit from it. And again, if you have any questions about this, like I'm all ears. I'm always eager to like teach this to people. I taught this to Evan. I haven't talked to him since because he went on vacation, but he said he's like, yeah, I'm going to do this every week because it seems like just too good of an opportunity to not make money. It's free money in the stock market. No one's taking advantage of it.
Well, I'll be reaching out to you because I want to try some of this too.
Yeah. Okay, I mean, like that's all I have for these options, unless I remember what I wanted to say before. But you have week 1 NFL picks.
Yeah, I've got a couple before we go here because Daddy's getting tired. But yeah, let's. I've got a couple games here. Okay, first one. Okay, well, the segue I was.
Well, hold on. I don't know, like what you're like. What's the segue? Like, cause I wanted to.
Oh no, we were talking about the Bengals, and I was going to segue into how much I know you share my sentiment. I like the Browns here.
Oh yeah.
We know that I think we've already kind of gotten into this. Oh, plus 5.5. I love it, especially the way the Bengals finished the season last year. You know, everyone's going to be riding high on them, and it's like I really like the point you made. Their draft pick went back to college, but it's like something's not right. They always struggle in Cleveland. They always start slow. I love the Browns here in this spot.
Yeah, this is the Bengals are the most overrated team in the NFL. I've mentioned this before, but when like the night when the Eagles beat the Chiefs in the Super Bowl, I posted a poll on Twitter and I said, what's your favorite like value or pick to win Super Bowl 60? And Bengals at 20-1 was the most popular response. Yeah, I'm like this is ridiculous. Like this team has the worst defense in the NFL. Their best player on the defense, Trey Henderson, might retire. And their first round rookie, like you said, he's like Billy Madison. He's going back to school. This team is just their defense sucks. and their offensive line's not good. So against teams with good pass rushes like the Browns, they're going to struggle, and like Joe Burrow always struggles in Cleveland. So, yeah, I'm hoping we get a +6. That'd be awesome.
Yeah.
Plus, I think the Browns are going to win outright, but so like 5.5 is so good. I just want 6 so badly.
Yeah, I have a hard time seeing this not be on our circuit card. So
Yeah, something weird would have to happen, like if Myles Garrett's out or something, that would be like the one thing I think. But
right.
other than that, I really don't see anything changing. It is worth noting that the Browns rookie running back Quinshon Judkins, we talked about last week, he got arrested for domestic violence, and like they're like, from what it sounds like, I don't think he's going to play at all this year, just because like the Browns talked about how they, for the past 2 years, they've done a lot of work on domestic violence, like more than any other team. Like they kind of like pride themselves on that, just like, just kind of getting ahead of it and stuff. And so like they told Quinshon Judkins, they're like, we're like, make this your top priority. Like, and when do you hear that from coaches and stuff? They're always like, oh, football first, football, family, and God, football, God, and family, or something. Like football has to be the top priority. And like the Browns are like, no, make this your top priority. So I don't know, unless he's like innocent and like the charges are dropped or something. Like even then, he might get a small suspension. But like I really, it wouldn't surprise me at all if he just doesn't play this year. He like. And the Browns said they're not going to sign into a contract anytime soon. He's not, doesn't even have a contract. So, but like that doesn't bother me because I don't know. He's a rookie. It's his first game. Like I don't know. It doesn't bother me at all. So,
yeah, I think it could play some factor, but given the circumstances that it would be his first ever game, we don't even have any idea what kind of impact he could make. I think that doesn't scare me away at all.
Yeah. So if this happened like 2 days before the game, I think it could have an impact. But like,
Agreed.
it's like a month and a half. I feel like it's not going to catch anyone off guard.
Yeah.
For your other games, hold on. I want you to mention the game, and I want to guess which side you're on.
Oh, okay. Tampa Bay and Atlanta.
Well, it's not gonna be a tough one. I know you like Atlanta. I know you're a big fan of Michael Penix. I like Penix. Atlanta's a home underdog, which is insane. I think these teams are even. I have them right next to each other in my power rankings. Yeah, I like Atlanta myself. Do you like Atlanta, or is it?
I love them. Yeah, I can't. Is that a joke? +2? Are you kidding? That I'm almost scared. It seems too easy. That's got to be a joke, man.
Yeah, the public likes Tampa a lot. Tampa was left tackle, by the way, is out. Tristan Wirfs.
Wirfs, yeah, I was gonna say, yeah, that's. I don't know, man. I guess people are just still. I guess people are high on the Bucks. I think this is going to be an easy win for Atlanta. I don't understand this line. It actually kind of scares me. I thought they would be like -2 or 3.
Yeah, they should be -2.5 or -2. Like these, like I said, I think these teams are even, but that's considering Wirfs. Like Wirfs out makes Tampa worse. So I think Atlanta, you could argue maybe a point and a half better, and then you give them a point for being at home. So that would be -2, -2.5. I don't think they get the full 3, but -2.5 seems right. And then yeah, we're getting +1.5, and some people might be like, who cares? Like +1.5, like it's not 3, But these things add up, and I think like the odds of a game landing on 1 is like 3%. So if you had like 3% plus 3%, plus another 3%, if you think the line's -2.5, it should be. That's like it's only your 9% difference there, and like that is significant. So yeah, I'm definitely on board. I think Atlanta wins. Another home dog that we like, which I don't really see the argument for Tampa like being a favorite on the road. Like I think Tampa's a solid team, but I think Atlanta is just as good. And so like why is Tampa favorite on the road? This is all public perception because like people don't recognize Atlanta as being competent because they saw what happened last year. They faded down the stretch, and then people know Tampa has won the division the last 5 years. So I think it's just a misconception here. I'm definitely on board with Atlanta.
Yeah, I'm surprised. I'm really surprised to see that line the way it is. And then the last one I want to get into is the Lions and the Packers.
Okay, well, I don't know if you share my sentiment on the Lions. I like the Packers. Now, the only thing that sucks is that they have a Thursday game coming up, but this is a bigger game than that one. So I like them here. It feels like they should be -2.5 or -3. I think they're better than Detroit. I think Detroit is due for a huge regression here. So am I right? Do you like the Packers?
I love him. Yeah, and I know I'm biased, but I love the addition of Matt Golden. I like him anytime touchdown in that game, and I also I think, yeah, as you've mentioned before, the Lions not having Ben Johnson, I think people are going to overlook that and expect, well, they've been really strong in the last 2 years, and they kind of got, you know they lost a playoff game they weren't expected to lose, and now it's like, well, they'll be back. I don't know, man. I think they'll still be okay, but I love Green Bay here in this spot, big time. I think they could. I think they could win, maybe pretty handily. And they lost they lost their center, and I mean Ragnow, and it's just, I don't know. They've got more issues, I think, than people think. I love Green Bay here. So those are three that I'd be interested in putting on the card, at least as things stand now.
I mean, here's another angle. You mentioned Ben Johnson. The Lions lost both their coordinators, and so they have to prepare for Week 1 against Matt LaFleur, who has actually he has a great Week 1 record. I know that he lost last year to the Eagles. That was a close game. If you look at all the other games, I think he's 5-2 against the spread in Week 1 or something, or 4-2. I can't remember exactly what the number is, but it is one of the better Week 1 records among current NFL coaches. So that's something else where you get a coaching mismatch, like LaFleur going against a team with 2 new coordinators. Green Bay looks great here. I totally agree. And as we know, Jared Goff struggles when he goes outdoor. Now the conditions might be fine. What if it's windy or rainy? That's going to make Goff's game a lot worse here.
Yeah, you know what? I also like Green Bay defense or special teams touchdown in this one.
Yeah,
I really do. I really like that too. So
yeah,
with all the new coordinator, I don't know. I just think there's a higher chance for forced errors. Maybe I like that prop too. So
yeah. I think, you might be onto something there with the prop. I definitely agree with the side. Cool that we agree on all 3 sides. So maybe a good omen for the Super Contest.
I hope so.
We're actually doing the Circa Million this year.
Yeah, I hope so, man. I hope so.
Super Contest went to $1,500 for the entry. Circa's still at 1,000, and Circa has a higher payout and better monthly contests too. So you have more competition there, but I think it's a no-brainer. I think it's you'll see the payouts in the Circa. It's so much better than the Super Contest.
Oh, okay.
Yeah.
Well, that's all I got. I think that's all I got for tonight.
Okay. I've done some short videos. I don't know if you guys saw them. I did my favorite Super Bowl odds picks. I did my favorite division picks. And these sportsbooks give you these crazy payouts. I got the Vikings at 7-1 to win the division. Just because DraftKings had 100% profit boost. They do this twice a week or 3 times a week. They just give you these 100% profit boosts. I'm like, okay, Vikings are plus 350. Let me put them at 7-1. I did that the Ravens, Bills, and Eagles to win the Super Bowl. I took them from plus 650 to plus 1,300. Wow. So I have all 3 of them at 13-1. And I was going to do what do you think about real quick? Let's parlay before we head out to win the division. I think it's Chiefs, Ravens, and Bills. That pays out plus 320, and I'm gonna use the profit boost to go to plus 640.
Oh wow!
Yeah,
I love that. Of course.
Yeah, 6-1 on those 3 teams. You could even add the Eagles, but I worry about the Redskins coming on. So plus Super Bowl hangover, Barkley, so many carries last year, you might get hurt. So, that I wouldn't add it wouldn't add the Eagles, but if you're really confident in the Eagles, or if you think the Redskins stink, like some of the Cassandra and other people on here, you might want to include the Eagles as well and get a much better payout. I know that Evan did a parlay like that last year. He had the Texans in there, so he got paid out pretty well. So that's something I'm gonna look forward to. But I guess that's about it for the show. I was gonna add more. I was gonna add a golf play for tonight. I'm not going to get into it because Scheffler is going to win this easily, but I'm going to do a bet to win without Scheffler. I think I'm going to put on the Chinese guy who's in second place. If you look at his approach numbers, they're great. He's kind of coming out of nowhere, but like he's done well in the past. Like he got third in the British Open in 2017. I'll tell you this guy's name correctly. The last thing I do here, Hao Tong Lee. He's -10, and he's like 4-1 to win without Scheffler, which I think is insane. Like he's the favorite. He should be the favorite. He actually, in fact, he's like right behind Fitzpatrick here on Data Golf, and yet like his numbers are like Fitzpatrick's like +350 and he's +400. So I don't get that. I guess it's because he's like an unknown, but like his approach play all 3 days so far has been great. He's like this shape looks weird because his around the green sucks, but like this course for around the green doesn't really matter. His approach is good. He's good putter. He's good distance. It's kind of what you need here. So I think I'm gonna like DraftKings has a profit boost on this as well. I think it's like 18%. So I was gonna put it on Hao Tong Lee. I was gonna post that on the site in like 10 or 15 minutes. So look out for that officially. But yeah, other than that, yeah, great show, Tom. I hope once again, I hope you guys got something out of this and you're able to make money. It's free money. I call it free money. Selling options on the stock market. It's really like just kind of changed my life almost because like I've been able to invest my kids' money and grow their accounts. I've been able to get income each month, pay the bills that way. Like it's insane, and no one knows about it. Almost no one knows about it. So I highly recommend it, and that is financial advice.
Love it.
Yeah. All right. Anything you want to shout out, Tom? Before it out, your Twitch channel, perhaps.
Yeah. Or follow me on Twitter. I haven't done a baseball pick. I know I've been giving out some losers lately, but
on the year.
Yeah. But we had this. This is about as bad a run I've had. I think I've lost 3 in a row, but that's all right. We're still up, and we'll keep it going. We're gonna keep it going here. I haven't. I'm interested to see what the lines look like tomorrow. I think I might have one for you guys. So nice. Just at Quacky T on Twitter, and thanks everyone for joining. Walt, it's a great time as always, man.
Yeah, great show, guys. Please like, subscribe, comment below, share this video. Visit the link in the description for the merch store. We'll be back on Tuesday. Again, I'm going to Vegas next week, so we're going to do a show on Tuesday and maybe Saturday if you're available, Tom. We'll have to talk about that, but we could do a live from Vegas show like who we did last year. But yeah, no show Wednesday, Thursday because I'll be traveling Wednesday and Thursday. I have some meetings that I lined up. So, but yeah, Tuesday and Saturday we'll do shows. So, all right, guys, have a great night, great rest of your weekend, and I'll talk to you Tuesday.
See y'all.